Market news now. Asian shares edged higher this morning after data showed the U.S. unemployment rate dropped to the lowest in almost 50 years, easing concerns of a slowdown in the world's largest economy. Sentiment towards the U.S. economy deteriorated sharply last week after disappointing data on manufacturing and services suggested the trade war was taking a toll and more rate cuts would be needed to avert a potential recession in the world's largest economy. The modest increase in U.S. jobs has eased some of those concerns, but traders warn that the downside risks loom large on the horizon. The U.S. unemployment rate fell to 3.5% in September to reach its lowest level since December 1969. Now, Japan's Nikkei stock index slightly down, while the Hang Seng and the Shanghai Composite both remain closed for public holiday. Wall Street surged last Friday after moderate jobs growth in September offered relief from a spate of dismal economic data this week that has rankled markets and fueled concerns that the world's largest economy may be sliding into a recession. The Dow Jones Industrial Average rose 1.4% to 26,571. The S&P 500 gained a similar mark to close at 2,951 points. The Nasdaq Composite added 1.4% as well, rising to 7,982 points. So let's get some more market news. We cross over to Arabile Gumede, who's standing by at the Johannesburg Stock Exchange. Arabile, what's moving the markets today?
Good afternoon, Nzinga. Well, certainly does seem like a more muted market picture, so therefore the local exchanges decided to head a little bit higher, following through, I suppose, from that jobs number out of the United States last week. Of course, unemployment there now, as you said, Nzinga, at the lowest in nearly 50 years, since 1969 there, sitting at 3.5%. What is full employment exactly, I suppose, is the question, when you can keep churning out around just over 100,000 jobs every single month. So certainly quite interesting on that front. We'll certainly see how the market continues to perform on that news. Of course, we only saw the Nikkei trading out in Asia, having seen the likes of the Shanghai Composite and the Hang Seng still sitting out for the day with public holidays in both of those regions. So the European market pictures also turned positive, a lot flowing through then from the United States and their jobs numbers. Certainly the question now becomes, well, will the Fed cut interest rates again? Well, it certainly seems like they don't necessarily have to if the jobs market is continuously this buoyant. So we'll certainly see how that factor plays out. But here are the exact numbers, and we'll unpack all the details in just a bit. Well, as you see, it's a little bit of negativity there when it comes to the South African currency, right? So 15.14 odd against the US dollar. What's moving that? What's shaping that? Well, let's chat to Bright Khumalo from Vestact Asset Management as we unpack that picture, perhaps just a little bit more for now. Then, Bright, thank you so much for the time. I suppose we'll start firstly with just the JSE's movement today, 2/3% higher for now. It would certainly enjoy that positive movement, considering perhaps the last 2 weeks that have been fairly negative.
Yes, last week was also a pretty bad week for most markets. This is due obviously to the US and the ongoing impeachment talks of Trump 2.0, and I quite like what Trump did, because he made he talked about Ukraine, investigating someone, and then he came back again and said China should probably investigate Joe Biden.
Said that live just in front of TV. He wasn't afraid to say it now.
Exactly. So now obviously the first time was, like a big thing, and now the second time it's like maybe it's just joking. We don't sure what's happening here, right? And obviously this made the likes of Mitt Romney, who's part of the Republican Senate there in Utah, because he was, is one of the prominent guys there. He's probably the second in charge, and he's again getting traction as well as someone who might be relevant in the next elections. But there's a lot happening in terms of that front, and like you said, the jobs numbers are very good, which helped the markets on Friday to close green after, like I said, basically a bloodbath for the past 2 weeks, which we've had to enjoy as investors, and then that trickled down to local markets, and Just looking at the local market, as for interest, the reason why you're probably up also today is because of those rand hedges, like you said, as the rand weakens, the rand hedges were turning green. We saw financials actually losing some ground there, down about 2% on average if you look at the banks.
The negativity, however, of the past couple of weeks, would that be something that, is gained, I suppose, now, considering that maybe it's run too hard downwards, that perhaps now we're getting to a stage where perhaps, there's some gains to be made in those that have been run too hard? I'm
not quite sure, because if you still look at the news flow, China this morning came out and said they're not, giving up on this trade war, and they're talking a very aggressive more tone as compared to previously, so they're not going to be taken for a sissy again. So unfortunately that's not what's happening, so markets are still going to be uncertain and volatile going forward.
The fear then with markets staying that volatile is, how do you keep up as somebody who gets into the market? Do you wait until Donald Trump sort of leaves office, which is November 2020? Or does that sort of leave you out of the market for too long and you perhaps lose out on
certain days? Yeah. I mean, the stats that in the past 50 years, if you had missed, the 5 events, the 5 major events in terms of returns, you basically have underperformed the whole market. And the lesson there is to always be invested. I always say, if you've got some money to put in the markets, I'd say hold on to it. But if you're already in the market, it's not a cause for a fire sale where you're supposed to sell everything and leave the market. I don't think that would be wise. But if you've got cash, don't let it burn your pocket. Just hold on tight. There could be potential if those that global recession does happen next year, because that's what the market is pricing in right now. And that will have a trickle effect on many markets, including ours.
I mean that hits us. We go into a complete recession, technical or not. Overall, we did get some news out on the local front. Is a trading profit out of clicks. Do they really still make anything of substance? And I don't mean their product-wise, but I mean really in terms of value for investors.
Definitely. I mean, when I started in the market about 6 years ago, I thought, clicks was overpriced and there wouldn't be any growth in there. But what I didn't see is that the growth in the space was so fragmented in terms of, the operations, the different operating companies, so fragmented that it gave birth to the likes of Discam and clicks, increasing market share by taking away, whether it's through the pharmaceutical distribution business or directly in that beauty, and that beauty space, which is one of their core things. And we know that beauty is very resilient, which is why we've seen the likes of Clicks and Discam do well. Well, I'm talking about revenues now in that period of time, because Discam is still a bit rich in terms of the valuation there. So yes, the numbers you're talking about, they expect again profits to be up something between 13% and 18%. It's still doing well. That United Pharmaceuticals distribution business is now making over 10 billion rands in terms of revenues, up something like 22%. So the business is continuing to do well. This is a business they bought in 2003, and everyone was looking at them like, what are they doing right now? And they've done well since.
What's perhaps looking perhaps at the weakness that has come up to the rand this morning in particular? Yes, the jobs numbers out of the United States last week could have meant that perhaps the US won't cut, which keeps South Africa in a more prospectful situation in terms of investment. But why does it seem like there's a bit of a shift this morning?
Well, that's what we thought, right? That it's good news for South Africa that the rates stay where they are. But now the US dollar is strengthening. I don't know what it's signaling right now, but it's strengthening, and every time the US dollar strengthens, where South Africa is on the other side. Yes, that's what's happening right now.
And that oil price, very quickly, any thoughts on just staying below $60 a barrel? I mean, we had the whole oil situation in Saudi Arabia. That has now come back.
We thought that was going to last for a while, and we were quick to actually increase our petrol prices here in South Africa. Hopefully we're going to reverse that decision, because it hasn't been longer than a week. And it's good for consumers if they actually do that. And manufacturers that use fuel as part of their biggest input cost in taking the goods in a place and condition where it's ready for use. It's a great opportunity to actually lower that oil price. That's all I can say. I mean, that fuel price in South Africa, because we've seen that it didn't stay above 65 for long. Like you say, it's going at 60 and it's going below there.
Yeah, it barely just touched 72 actually at that
That's
stage.
what happens when you have a lot of people with a lot of reserves that they could use. Every time there's an opportunity like that, when the price goes up, you're like, hey, we can come back to the market.
Exactly.
Yeah.
And just gain back in there. All right, Bright, thank you so much for the time. Really appreciate it. Bright Kumalo there from Vestac Asset Management joining us to help unpack that market picture. Well, this week indeed, Thursday in particular, we see the release then of the manufacturing and mining data combined plus minus 20% of South Africa's economy in that data. What that says then is certainly how have things fared in that third quarter. We're about to reach the final tranche of third quarter economic data, and that will certainly shift things along and move us to where we finally know what happens with the growth picture as well for that third quarter. It has been difficult indeed for South Africa, and wanting to achieve even growth levels of near 1%, which by all accounts doesn't seem to be happening. That number, those two numbers will certainly need to pick up across the quarter. For now, however, that is where the buck stops. It's back to my colleague Nzinga. Do stay with us. This is On Point.